All right, traders, it is the 24th of November, 2017. My name is Jameson. Welcome to Behringer Trading. We're looking at a daily candlestick chart here of CenturyLink. The ticker is CTL. It is a utilities fixed communications industry here. Happy post-Thanksgiving. I hope everyone's doing well. And we are looking at a kind of a bearish trend that's present. So when we have this well-defined bearish descending channel, we can see that there's been several tests and retests of lost support confirmed as resistance, and we continue to break down. I will note that it looks like prices have created conditions at which it was oversold relative to the bearish trend. And that's kind of where we're at now. It was a little tease here previously in this consolidation range. We saw a nice volume expansion, but for that daily session, we didn't see any upward price discovery. In other words, we have a very big bullish effort, but the very narrow price spread. So if we look at volume relative to the other volume, the amount of buying that was present or perceived buying that was present here should have resulted in more upward price discovery. That would have been a bullish observation. The fact that we have a big effort here, little reward in price, suggests that there's some distribution. In other words, lots of effort went into buying this, and yet we weren't able to break resistance. So that's some selling in the strength, some distribution. Retrospectively, it's easy to see. We can see then we had some expansion of supply on this breakdown. We lose this level of support, and as we go to retest it, there's just not enough. Again, this is a relatively large amount of buying. That buying is unable to recapture this level of support, and then just more supply. So it continues to be a bearish theme. It's trading below the 20, the 50, the 100, and the 200-day moving averages, and they're all declining. So the moving averages are accepting the bearish trend here. The RSI is kind of an oversold territory, but you can see that that's not quite actionable. You can see a chalk and money flow is a little bullish diversions present, but you can also see that previously, and that's not quite actionable. The MACDs beginning to show an increase here or a flip and some bullish momentum. But really, I guess I would say that there's probably minimum upside at the present time. And part of the reason is because there hasn't been enough consolidation. So have we seen a selling climax? I can't say that I see climactic selling. I don't see what I would call a stopping action present, which is I don't see a defined level of support or preliminary support, a selling climax, an automatic reaction, automatic rally, I apologize, and then the secondary test. I just don't have that organization yet to say that this is the end or the bottom here for CenturyLink. I will also say that we haven't challenged and broke the angle of decline. So at most, I would say that I would anticipate that CenturyLink would, because it's oversold, rally back into within the bearish trend here and maybe consolidate here for several months to build some cause, at which time maybe it can rally and retest these moving averages. But really the outlook longer term still remains bearish here.